Well, if you go back decades of time, there were many more banks. And the top banks, David's obviously at one of them, isn't going to consolidate. They're done buying. They're an amalgamation of many banks. So last year, 5% of every bank in the country actually sold. So we expect similar things, if not greater, this year, and there's an urgency for them to get together. And the urgency is manyfold. I mean, one is obviously interest rate margins. The other is cutting costs. Loan growth is tepid. However, with the Fed's policy, it cuts both ways. Margin is down, but credit quality is terrific. But if you can get together and cut costs, not only can you create more earnings, you can actually have a bigger tech budget. You're going to have less branches out there. A lot more banking services are delivered through technology. And, J.P. Morgan and Bank of America have taken all the consumer business. But, the real bread and butter of the regional banking community is small business and middle-sized business. And they're major players in a lot of small communities around the country.
How big do you have to be persistently successful?
That's a really good question. I mean, if you want to compete with the big four, you've got to be a lot bigger. So you could be something like a Truist, which combined SunTrust and BB&T and created a, over $500 billion company. There are 100 companies that are between $10 billion and $100 billion. And I expect to see a really rapid pickup there because they're trying to compete up and they need more products, they need more technology. And, I really like to focus in some of the fastest growing parts of this country. There's some real differentiation in those parts.
Well, okay, so I want to hear what part of the country you think is growing really fast, but also how closely you're paying attention to politics and to elections this year and the way that affects these fast growing parts of the country.
Sure, absolutely. You're spot on. Certainly state tax policy is a big deal. And I'll start with that versus going to federal tax policy. If you think about places like Tennessee and Texas and Florida, they've got huge in-migration of people, huge in-migration of businesses. If you're in Nashville, Tennessee, good luck trying to find commercial space. I mean, it is growing so fast, it's hard to, for businesses to find enough space. Certainly a lot of people are moving there. If you then take that to the federal policy and talk about SALT, that's true. You could have certainly some less attractiveness to getting out of some of the higher tax states if they get to bring back deductibility of property taxes and things like that. But that growth, obviously, in those southern states is very, very real and, has made those companies very attractive.
But I think there's also, it is challenging for small banks in general because we've got a slow-growing economy. We've got the lowest birth rate in 30 years. That affects things like housing demand. We're not going to get back to 1.5, 2 million housing starts. So that's relatively slow. The auto sector is relatively slow, and even employment growth. Yes, there are fast-growing states, as you mentioned. Obviously, Florida, Texas, Tennessee. But overall, U.S. population growth is actually percentage-wise at its slowest in a century. So when you think about bread and butter banking, it is a tough environment. It's not just the Fed.
Doesn't technology make it easier, though, for those smaller banks? Because you don't have to invest so heavily in labor, where technology is taking over in many places.
Well, yeah, technology makes it easier. Regulation makes it harder because you have to have a big staff of lawyers these days.
Yeah.
Well, look, I'm sorry to interrupt, but J.P. Morgan actually, in its consumer business, actually let some people go today. And that's because of technology, not because J.P. Morgan isn't doing great in that business.
So, Anton, I assume you believe there are going to be just many fewer branches. Even the big guys are going to have fewer branches because they don't need them. Because I use my Chase app all the time to deposit checks. I don't go to branches anymore. I go to auto tellers if I need to. But why is it then, if the trend is for bigger is better, I suppose, why is it then that I always see new banks popping up on street corners here in northern New Jersey? Names I've never heard before, and they're not big.
Well, I think deposits have always been very valuable. Maybe less so now with the internet, but there's a lot of people who have great internet strategies to go out and gather deposits. You are seeing big banks actually add strategic branches in markets like Atlanta, in markets like Charlotte, believe it or not, which is a very heavily competed market. And you're right, little banks keep popping up all over the place, and particularly in some of the more rural places of the country where the big banks have basically effectively, either sold or shut down and left town. You've got these small banks that are really a very part of the daily lives of these people. It's also a social place for them to gather. So you have an ability for the big to thrive, and you have ability for the very small to thrive. And everybody in the middle has to figure out a strategy to get bigger and stronger.